Alrighty, in this video we're going to be talking about premium and discount pricing. Alright, so what is that in simplest terms? Well, whenever something has entered a premium marketplace, it means that it is considered expensive now. Whenever something has entered a discount marketplace, it means it is considered cheap. Okay? Now, whenever we're talking about premium and discount marketplace, it's also important to understand what market structure you're operating in as well. Okay, that's very important. So what we're going to take right here, and we're going to go over several different examples. But in this first case, we're going to be looking at ES here from Friday. This is a really good example of price entering a premium marketplace. So when we're looking at this chart right here, what are we looking at? What is the market structure on this chart? Well, this is what we call something that is operating within a bearish market structure on the 4-hour chart. Why? Well, because it's consistently putting in lower highs. Okay, I mean lower high, lower high, lower high, lower high, lower high. It's consistently putting in lower highs. It's consistently making new lows. Okay, and what we saw on Friday was this thing pushed up into a premium marketplace. Now, my bias was bearish on Friday. I'm not just going in here in hindsight. No, I was talking about with my mentees on Friday, and we were talking about this chart, and my bias was bearish for a few reasons, okay? Now, this isn't kind of the topic of this video, but it kind of connects because we have previous days lows intact. We had H session lows intact, right? So because we have this liquidity intact from yesterday, and then we're coming to a brand new day, and price is doing this first things first. It's pushing up first things first while leaving this liquidity intact to be in previous days lows, which is also H session lows. And it's pushing up within this range first things first into a premium marketplace. Okay, so it connects, of course, because the liquidity that you got intact, that's very important too. So we have this thing pushing up into a premium, and how do we measure that? Well, you got to take your price range. So you see how you have a swing high right here. Look at my cursor, high sign in the middle, lower high on the left, lower high on the right. What is that? That's a swing high. And this was the absolute high. This was the absolute high before we had that move lower, that made new lows, that had that next leg lower. Because remember, we're just saying like prices consistently putting in lower highs. This is that recent lower high that we had before we before we made a new low, right? So what is that? Well, that's a price range. That's what we call a price range, okay? And to measure a price range, you will take your Fibonacci, which is right here, plot that on the high to the low, and simply measure that price range, okay? And what I want you to do now is I want you to find 50% of that price range. Where's the equilibrium price point of that range? Look at my cursor right there. See that little green line right there at the very middle? That's 50% equilibrium. So here's what you need to understand. Whenever price is above that 50% level, it's in a premium. Whenever it's below it, it is in a discount marketplace. Okay, so price, when it was having this surge lower, because this is bearish market structure, may I remind you, but when price is having that surge lower, it's making new lows, it's bearish market structure, but also at the same time, you got to keep in mind, it's in a discount marketplace. It's in a discount marketplace. It's in that range. It's in a cheap marketplace. And it is remaining in what is considered a cheap marketplace until it comes up above 50% equilibrium within that price range. Okay. And you can see it ends up, so all the way in here, now I'm on a 15-minute chart. And I still got that Fibonacci displayed on there. There's 50%, remember. So all the way in here, like you have this thing trending up higher at this point, and so it's bullish market structure in a discount marketplace, and that could be useful for like counter trend scenarios as well. Like you can look for bullish opportunities all the way up into a premium within that range. Now, sometimes, like this isn't a perfect science, of course. Sometimes what you'll see is it'll come up and just have like a little light retracement, maybe up into like a 38 extension or 23 extension, even that week, and then it'll just continue to roll over. Right? It doesn't always have to come up to a premium or a discount right away. But we see this happening, and we see this thing because again, remember what I told you, we have previous days lows intact, we have agent session lows intact. This thing's pushing up here. It's pushing up here all the way up into an expensive marketplace. Now, at this point that we're pushing up into an expensive marketplace on ES, look at my cursor. Look, you see how this is, at this point, guess what? It's bullish market structure. It's bullish market structure on the 15-minute chart, and it's pushing it because it's consistently putting in higher lows. It's consistently making new highs. But I just told you a second ago how on the 4-hour chart, we go to the 4-hour chart, it is bearish market structure. It's consistently putting in lower highs. It's consistently putting in new lows. So we have this thing on the 15-minute. It's now pushing up into a premium within this 4-hour range, operating within a bullish market structure. But the 4-hour is bearish. So what does that mean? Well, that means we don't have multi-time frame alignment, but we understand when it's pushing up above 50% here, it's in an expensive marketplace on the higher time frame within a bearish market structure. So what can we do with that? Well, what we can do with that, if we want to get a really good entry, and what we can do is wait for multi-time frame alignment. Okay, so this is what you typically will do if you're trading premium and discount. If you want to make sure that price has pulled back sufficiently, you want to see it pull back into a premium market. Now, do I always operate off this? No, I mean, I'll get scalp plays. Like I'll still get scalp shorts even when pricing in the premium, because I have the experience to be able to do that. But if you really want like a simplified way to always make sure, or to make sure that price has pulled back sufficiently, then utilize premium discount. So you can see this higher time frame is bearish. We measured this price range, and now price is pushed up above 50%. At that point, you can establish it's expensive on the higher time frame. It's an expensive marketplace. It's overpriced. It's moving to an area that's overpriced at this point. Okay, and at the same time now, as we just said, the 15-minute here is bullish though. It's still ramping up. It's still bullish. So what do you think you would utilize next to be able to time that for when it's ready? Because guess what? It could just continue to push up and ramp up, take these highs. But there's certain signatures that you can look for once it pushes up into a premium marketplace to time that move lower, to look for that next leg lower. What is that called? Well, this is where we utilize market structure, because we've already concluded that. Well, we concluded that the 4-hour market structure is bearish. Sure, that's a higher time frame trend. But at the time that it pushes up into the premium marketplace above 50% equilibrium, the 15-minute is bullish at this time. So we don't have that multi-time frame alignment. The 4-hour is bearish, the 15 minutes bullish. So if you want to get everything aligned and then you want to time this thing correctly and anticipate, okay, it's ready now. What do you do? Well, you utilize the 15-minute and you look for that shift after it's pulled up to a premium marketplace, after it's pulled up above 50% equilibrium. Okay, so you can see this thing's consistently pushing up, and then right here we end up getting that displacement lower. Why is this the displacement lower? Well, see how we had this short-term low right here? It closed beneath it, strong close, but also we got the fair value gap a little bit later right here. This is what you call a displacement lower. Okay. This is what you call a shift in market structure lower. That's what you call big money, smart money, whatever you want to call them, showing their hand, showing you, because me and you, we're not causing this big of a move lower, right? There's deep pockets that are doing that, okay? That's like, ICT uses the analogy of the elephant jumping in a small pool. It leaves a big splash. It leaves a big splash they can't hide. It's right there in front of you. You can see it. It's leaving that displacement. And again, after it does this, after it comes up into a premium marketplace, after pulled up above 50% equilibrium within that range. Because again, don't forget, like this is that 4-hour price range that I have displayed right there. We're just on a 15-minute now. We're on a 15-minute at this point, but I've already measured that 4-hour range and it pushed up above 50% into a expensive marketplace within that 4-hour range. And don't forget that 4-hour is operating within a bearish market structure, and now the 15-minute has this crack that is now a bearish shift. So what do we have at this point? Well, we have multi-time frame alignment at this point. It's pulled up into a 4-hour premium, and now the 15-minute has a bearish shift right here. The 15-minute has a bearish shift. So now the 4-hour and the 15-minute are now both bearish. But we want to time our entry better though, don't we? So how can you time your entry better? Because here's the deal. When this thing's pushing lower right here, what is it in? This is what, because like premium and discount is on every single time frame. I don't give a damn if it's the daily, the 4-hour, the 1-hour, the 15-minute, the 5-minute, the 1-minute. Premium and discount is on every single time frame. So this thing comes up into a premium marketplace on the 4-hour, and then it moves lower. And then guess what? It comes down into, well, actually a discount again from the 4-hour right here, because you can see there's 50%. So short term, it comes down into a discount marketplace. Now it's still bearish, and at this point, it's moved up into a premium. So you can anticipate it's about ready to have that next leg lower at that point. But then when you have this displacement lower on the 15-minute, it comes back down to a discount within that 4 hour. But not only the 4 hour does it come back down to a discount marketplace because it's below 50%, it comes back down into, it's in a 15-minute discount now too. Because guess what? It's making new lows. You remember how we were just talking about a second ago, how this was making new lows in the 4 hour, it's in a discount, and then it reverts into a premium? Well, this 15-minute, because price is fractal, remember, price is fractal. What occurs in the higher time frame occurs in the lower time frame. It's the same exact deal. Let's remove that 4 hour Fibonacci and let's plot it on the 15-minute now. If we were to take our Fibonacci from that high down to this low and we measure that 15-minute price range, guess what? When we're making new lows in here, when this thing is just getting demolished right here and it's actually having that original displacement, it is in a discount marketplace. It's considered short-term cheap, okay? And then you simply take that high and then boom, you measure the high, like where that displacement originated at, and then you measure that price range. And then you can see price ended up pulling back into a premium right here within that range. It pulled back above 50% equilibrium of that price range. So what does that mean? Well, don't forget also when it's pushing back up into this area, it's also in a 4 hour premium at that point too, back up in a 4 hour premium. And now it's in a 15-minute premium at that point too. So what can we do with this information? Well, if you want to get a really precise entry, of course, do you want to be shorting something whenever it's in a cheap marketplace? No, of course not. You want to be shorting something when it's in an expensive marketplace, whenever it is overpriced. And you utilize this, like you measure these price ranges and you find that equilibrium price point and you get your entries in an area that is above that 50% level. Because at that point, you know you are getting in an area that is considered expensive, in an expensive marketplace. So when you have price pushing up, that's a good area for a short play, of course, because why? Well, because at that point, it's in a 4 hour premium, but it's also in a 15-minute premium. So you have multi-time frame alignment at this point. You have the 4 hour bearish, you have the 15-minute now bearish, because now you got that shift, and then you get a push back up above 50%, and it allows you to time it. It allows you to get a good entry that is considered expensive. Now, and then in regards to like profit target, etc. Well, I mean, there's different ways you can go about it. There's like a million different ways to skin a cat, and it depends how aggressive you want to be with it. But also another big bonus, whenever you're waiting for these premium and discount marketplace entries, it allows for really good risk reward too, because you're essentially anticipating, like it's already moved up into an expensive marketplace. But like if you get an entry, like if you, like say you get a shift, but that shift is already in a discount marketplace, and you'll get stopped out a lot more in those cases because it hasn't moved up into what's considered an expensive marketplace yet. So like say, for example, let's say price comes down, like we were just talking about how this thing pulled back into a discount, right? And like say it comes up and it has a retracement, but say it only pushes up to like the 38 extension, and then it has that shift. I don't really trust that as much because it hasn't pulled up into an expensive marketplace. So what you'll see a lot of times is it'll create further buy side before it has that next leg up into a premium. Is that always the case? No, of course, sometimes, or plenty of times, it'll come up into, it'll have like a short retracement. If it's like a super weak trend, if it's a super weak trend, then there'll be plenty of times where it won't come up to a premium and it'll just continue to get demolished. But, and then sometimes you'll just see it just continue to get in a deeper discount. Of course, there's still times where it'll just continue to get in a deeper discount, but then this goes back to being picky and waiting for the best entries, waiting for high quality entries. That's the way you'd go about doing it. You'd wait for that premium. And when you wait for that premium, like the thing is, it's already moved up into an area where it's overpriced and it's expensive. If it's truly expensive, and then you have this multi-time frame alignment, there's no reason for it to continue to move higher. So what you can do with that information is you can utilize various time frames, like a higher time frame, a lower time frame. Look for that alignment, that multi-time frame alignment. Look for the lower time frame premium like you got right here. And guess what? You know what that allows for? Well, what that allows for is beautiful risk reward, because we've already concluded that like this push up right here, it moved up into an expensive marketplace. It moved up into a premium marketplace. So guess what? If this thesis is correct, then it should not go higher than that. So what you should do at that point is, now, again, what I like to do is I like low-hanging objectives, of course. What that means is I don't really like shooting for like big PTs, because I don't have that itch to get huge risk reward. I know singles add up. I know just taking like simple one-to-ones is like, you can make a lot of money doing that, right? So of course you could just get in at like a premium right there. You could risk that high right there. Okay, because that's how you do it, is to have that displacement leg. And you could just target that, get a simple one-to-one if you just like low-hanging objectives like I do. Or you could, again, as I was saying, but when you wait for these premium and discount areas, you can target bigger objectives because it's valid at that point. Because guess what? That push up, we already confirmed, like it's already moved up into a 4 hour premium. It already moved up into an expensive marketplace. Okay, so with that being said, since it's already moved into a premium, what could you do? Well, you could target lower objectives like this. And then that's where you get your bigger risk reward type of deals. But the thing is, like, you want to see it come up into an expensive marketplace. Because if you don't, well, then you're going to get hit with more, you're going to get stopped out a lot more because it never pulls up into an area that's considered expensive. But this has. It's moved up above 50% on the 4 hour. It's moved up above 50% on the 15 minute. And that's how you time your entry. You look for that multi-time frame alignment. You look for the premium on your higher time frame and your lower time frame. Preferably you want at least 2 time frames, at least one higher time frame, at least one lower time frame. Look for multi-time frame alignment. Look for a premium on both, if it's a short scenario, of course. And of course, you got to understand what structure you're operating within, of course. Like, we've already confirmed that this is bearish market structure on the 4 hour. So it's a bearish trend. It's flowing lower. And then you saw this thing push up into a premium within that bearish trend. And then you lost a 15 minute to look for that shift. So you have a bearish trend on the 4 hour at this point. You have a bearish trend on the 15 minute at this point. And you have premium on both time frames. You see how it connects? And then when you have that premium on both time frames, you're flowing with the tide. You can then target these bigger objectives like this because it's already moved up into an area that is considered expensive. Okay, if it's already moved up into an area that's considered expensive, it now wants to flow to the next low because it has no reason to move higher. It already moved up into an area. It doesn't have no reason to at that point. So now it wants to seek the opposing sell side because the trend is bearish, and that allows for really good risk reward if you want to shoot for those objectives. You don't got to. Again, you can just take low hanging objectives, be content with that if you want to. But guess what? It is available to you if you want those good risk reward type of deals, and that's where you get it. That is a way you can do it. That's how it operates. And as I was saying, like, it operates. And then we had NASDAQ the other day as well. Not quite, and this is a good example of it's not picture perfect always, right? Like, we had that on ES, it actually gave a nice setup, but now NASDAQ, it pulled up to a premium as well, but this one's not quite as clean as you can see because it just continued to get demolished in a discount, and that happens plenty of times as well. And then, somebody will see this and then they'll get discouraged. It's like, oh my God, this doesn't work. It works. It's just, you don't have the patience for it. That's what it really comes down to, because not every play is going to give you what you want, because you can have something like this. And I think this is important to show this as well, because, people on YouTube, when they're doing these tutorials, they like to just show all the perfect examples, right, of it working out. But here's NASDAQ. Like, NASDAQ did the same thing. Like, this came up into a premium marketplace as well. You see how it came up above 50% of that price range? It's bearish market structure as well. It's a bearish trend, isn't it? Absolutely it is. And this push up, because I was bearish on NASDAQ on Friday as well, and it did take out that low as I anticipated it would, because, yeah, previous day's lows is intact, 18 session lows is intact, and it pushed up into a premium within this range. See how it pulled up above 50% equilibrium? So it moved up into an expensive marketplace while operating within a bearish trend. So think of it like it's had a chance to breathe. It's had a chance to pull back, and now it can see the opposing sell side because it's had a chance to. Okay, and then you can see this thing. You can see, like, it never gave any type of pullback in here to, like, because you got the 15 minute, right? But then it didn't give the shift until we took out this low right here, and then it gave the close, but then it never gave a pullback into a premium now, did it? It didn't. Like, it never did. You can see that. Like, this thing just got, it just got demolished. And sometimes that'll happen. Now, yeah, I mean, somebody may say, okay, but what about like this high right here? You can do that, but like, and if it's a really weak trend, you'll still be rewarded. But I like to use the absolute high of the displacement leg. And you can see it never came up into a premium within that. It just continued to sell off. And guess what? You have plenty of examples where that happens. If it's a super weak, then sometimes it just won't pull up into a premium. And then what a lot of beginners will do is then they'll get discouraged, and then they'll start looking for something else because, oh, I don't have that 100% thing that happens all the time, aka a holy grail that doesn't exist. But if you're patient, you'll get plenty of examples, and then ES is just a prime example of that. That did give you a premium. Look, right there, there's a premium. NASDAQ didn't, but ES did. So of course, it really just comes down to a patience issue for most people, because you're not going to get something that happens all the time. But like, that's a really good way though, that you can, it's a good timing element that you can use, like to know when it's pulled back enough. Is it going to work 100% of the time? No, and it's also a really good way to, like, if you want really good risk reward, that's how you do it. Because you got to understand, like, you can tag these low down here. Like I was saying, you're able to tag that low down there because it's bearish market structure. You're flowing with the tide. You're not fighting the trend or anything. You're flowing with the tide. You have that liquidity still intact down here. And now you have a change in trend. Like, that's smart money showing their hand. That's big money showing their hand. And then if you patient enough to wait for that retracement within that range, guess what? It's expensive on the 4 hour and the 15 minute. So guess what? You're able to frame the trade off that high, and then you're able to target this external range liquidity down below. It allows for a really good risk reward. That's the beauty of whenever you have a higher time frame, like you have that higher time frame trend established, and then you have the 15-minute aligned with that, or the 1 hour aligned with that, and then you're able to target these objectives, but you utilize that lower time frame chart to look for that crack in market structure to show its hand before it takes out this low. And then it allows you to shoot for bigger objectives like that. That's how you get really good risk reward on those types of plays. And those are the best types of plays, right? Those are the best types of plays you can look for. Is when you have that market structure aligned on the higher time frame and the lower time frame. And then you utilize, what I just told you, premium and discount to time your entries. You can get really beautiful risk reward plays too. And as I was saying, like it occurs on different time frames as well. Like it's not just subject to the 15-minute, right? So let's see. I can't remember if this did or not, but let's say you wanted to take it a step further. Like we already concluded that this came up to a 15-minute, but what you can also do here, if you want to take it a step further, if you want to get even better risk rewards, so think about this. If you want to get even better risk rewards, because you say you want to target this low, right? You can go in here and you can look for, like, say a 5-minute shift. Let's see if the 5-minute gave anything. So it came up to a premium. You see that? And so you see right here, you get that 5-minute shift. You see that? Look how it came down and cracked this low right here. You got that strong close. You got that fair value gap. What you could do here next is you could look for a push up into a premium within that range. You see that? And I think it did. Yep, right there. Just barely it came up into a premium. So let me remove it because it's getting kind of messy. But it's like the same exact deal. This is a prime example of price being fractal. Like we've already concluded the 4-hour push up into a premium with a 15-minute push up into a premium. And now guess what? We're measuring this 15-minute range and we're going to the 5-minute here. And then you can see this thing, it has that crack on the 5-minute right here after it pushed up into a 15-minute premium. Again, this range right here is that 15-minute displacement range within that 4-hour range. And now we got this 5-minute right here. It comes up to a premium right here, and then boom, it gives a shift on the 5-minute. And you can even narrow it down even more. You can go to a 1 minute if you want to. You can go to the 1 minute and do it like that, even on that time frame. You see how like price is fractal? Every single time frame it does this. It's the same fucking signatures. And then you can do it right here. Look, it comes down to a discount. Because when it has this push lower right here, it has the displacement. It's taking out this low. Of course, it's in a discount when it's doing that. And if you want the most precise entry, right, what would you wait for? Well, what you would wait for is a push up into a premium. Look, premium. Like, I mean, it's debatable whether you got in on that or not. I mean, it was a very light tap of it. But just for the sake of going over this example, premium. Comes up to a premium, and it sells off and attacks the low. Attacks low hanging objective, attacks this low down here, and the same deal. Even on that lower time frame play, it allows for just such a beautiful risk reward as you can see. And that's how you do it. Like that's the simplest way that you can establish this price has pulled back enough is by just utilizing that 50% equilibrium, measuring your price ranges and working off of that. Okay. And that's how you would approach it. So hopefully you enjoyed this video. If you did, leave a like, subscribe to the channel, and I'll catch you later.